Welcome to the end of day review for Thursday, the 15th of February 2024. Starting off with the economic calendar, as you can see, there's a bunch of red folder news, the most significant of which was the GBP, or rather the Great British Pound GDP news, which was positive, and that essentially meant that we couldn't short for the entirety of the London session until we had evidence in the New York session to support that the Asian high of the day will actually hold. If you recall from my London or New York outlooks where I mentioned that there's only reason to trade short per the higher time frame narrative, and it was for that reason that we couldn't trade any long positions. But as you can see, had we traded a short position, we would have likely taken a loss. So let's unpack this. From a 4H perspective, we know that we are in a confirmed bearish trend. Recently, in terms of order flow, we reached the protrend extreme, from which point the pullback phase had achieved its target, and we know that the last point of supply that associated itself with the pullback phase also failed, which is right here, this POI right there. That failed and then validated the 4H pro-trend primary leg. From that pro-trend primary leg, we knew that from a higher time frame narrative perspective, we only have reasons to short, and if we come into these primary OBs, then we can build legs on the mid time frame to then validate shorting. But that's mostly from a previous high of the day, low of the day consideration. If we anticipating in the current day where the high or low of the day may form. Perhaps that's something we can chat about tomorrow, but for the purposes of today, there was only reasons to short and nothing further than that. In terms of the previous day, we had anchored our fib to the high and low of the day, which was valid. However, this positioning in terms of a high of the day forming is only valid up to the London lull, and that's purely because a London lull or New York high of the day is unlikely to hold, and thus for that reason we don't anticipate New York or lull high of the days, and only anticipate Frankfurt or London high of the days. For that reason, we didn't take any shorts in and around these areas, but we did focus on the current day PA, where the Asian high of the day was validated by Frankfurt, and it was purely because of the GDP release. However, the GDP release was positive, and because it's positive, it only enables us, it only supports the GBPUSD be traded to the upside. As you can see, it didn't trade to the upside immediately. It first came down a little bit and then proceeded to the upside, and then we had a bunch of New York news. However, this was mixed and wasn't completely bullish for the USD, and thus we couldn't justify why this New York high of the day should hold. As a result of that, we didn't take any short positions because, like I said, we need convincing New York, convincing and consistent US session news to support why this New York high of the day will hold. As you can see, it clearly didn't hold, and now we're sitting in a position where both the New York low of the day and high of the day are unconfirmed, and neither direction is high probability to trade. That's pretty much my end of day review for today. Again, I didn't take any trades. That's perfectly fine and within my trading plan, and it's just about sticking to your plan, preserving capital for the times when there is trade plan alignment. Other than that, I hope you had a good trading day, and we'll chat again tomorrow for the London outlook.